Interest rates at 8%, record high home prices. Is anyone buying homes right now? And if so, is anyone selling? Let's talk about it. Hey everyone, and welcome back to my channel. I'm Adam Summers, a 10-year realtor and your go-to source for all things real estate in Metro Detroit and Metro Ann Arbor. Labor Day has come and gone, so the traditional home selling season has come to a close. And at the same time, we just heard that interest rates went up to 8%. That might leave you wondering, what's next? Today, we're going to have some exciting updates on our local real estate market here for September of 2023. Specifically, I'm going to be focusing on my neighborhoods here in Plymouth, Northville, and Novi, Michigan. Whether you're looking to buy or sell, this information is going to be invaluable for you. First, just a friendly reminder to like the video to help others find it and to get these valuable insights, and please hit the subscribe button if you'd like more updates like this one in the future. Despite rising interest rates and rising home prices, our market has stayed strong in favor of sellers and homeowners. How do I know this? Let's look at the numbers. First up, our months of inventory stands at just 1.5 months. Now, if you don't know what that means, the simple explanation is it tracks how quickly homes are selling in any given market. Anything less than 3 is an indicator of a competitive market, so 1.5 is very competitive. For reference, normally anything above 7% is considered a buyer's market, or a market where buyers have the advantage due to more homes being for sale than people who are out looking. Another indicator is the fact that homes are still selling at almost 102% of their listing price on average. 98% is standard for a seller's market, so 102 is fantastic. It shows that buyers are still overbidding because they have to. Typically, when homes are being overbid on, it's because there's a lot of competition when that home hits the market. This means, as you can imagine, they're selling quickly. In fact, including the coming soon status, which is before showings even start, it's taking just 7 days on average before an offer is getting accepted, and that is lightning fast, guys. Playing into everything I've already showed you, let's talk about new listings. In August, we only had 204 new homes come on the market. That's down from 260 of August last year, 324 in 2021, and a significant drop from 479 in August of 2017. All of which were considered sellers markets. So the trend that we're seeing is that less and less and less people are selling, and we'll get into that on the why on that a little bit later. Moving on to sale prices. Median sale price is currently at a strong $510,000. That's a jump up from $465K of last year, $445K of August of 2021, and $364 going back to 2019. Those are all great indicators of the state of our market. Competitive and in favor of homeowners and sellers. All of that early data sounds great, but we know that rates have been jumping up for a year and a half now, while prices have also risen to record highs. Now, let's look at the other side of this housing market. We'll start with mortgage rates. As you may know, mortgage rates tend to follow inflation trends. Inflation recently spiked to almost 10%, causing mortgage rates to substantially rise to about 8%. However, the good news is that inflation recently dropped to 3%, and as a result, mortgage rates are predicted to drop in the near future. According to Fannie Mae, MBA, and NAR, rates are expected to be around 6.3% by the end of this year. This is promising news for potential buyers. With rising rates and rising home prices, you might be thinking, wow, it must be getting harder to afford a new home. And honestly, you would be right. Any first-time buyer in the market right now can attest to this. We track something called the Housing Affordability Index in our industry, and I recently calculated ours for Plymouth and Northville. It might sound complicated, but honestly it's not. It just compares household income, home prices, and mortgage rates to see how affordable homes are for the typical family in the area. A score of 100 means that homes are exactly affordable. Less than 100 means homes are becoming less affordable, and anything over 100 mean homes are more affordable, or that it's easier for a family to buy a house with their income. In our area, it's the lowest I've ever seen it, with a score of just 54. That's compared to 114 for the rest of the Midwest. Now, our market here does have higher prices than a lot of the surrounding areas, so this affordability score difference makes some sense, though even for us, a 54 means that a family making the typical amount for a Northville or Plymouth family can't afford the average home in this area. How does this all add up? You might be thinking, if homes are the least affordable they've ever been, how is the market so aggressive? It's all inventory and population driven. We talked about inventory earlier and showed that it's been drastically dropping every single year. But why has our inventory fallen so drastically? Well, for the past 2 years, it's largely due to the interest rate hikes. Back in 2020 and 2021, the economic uncertainty during the pandemic played a huge role. However, now we're experiencing something called a lock-in effect for mortgage rates. What is a lock-in effect? It means that people don't want to move because the rates are getting too high. About 58% of American households have no mortgage, and among the remaining 42%, 26% of them have rates less than 3%. That means outside of extenuating circumstances like death or divorce, only about 4% of Americans might be motivated to sell their homes with the current rates. And honestly, can you blame them? I mean, who wants to take out a new mortgage with a higher payment if they're happy where they are? Especially if they're going to be downsizing and would have a similar payment to what they have now, but they only get half of the house. Combine this with longer homeownership durations and a growing population of young buyers who don't know any better and are accustomed to these rates, and we have a highly competitive market. So you get it. The market's competitive right now, less and less people are selling, but what does that mean for the future? We predict that if mortgage rates do decrease next year as expected, it will finally open up some of that inventory while refueling buyer demand for the ones who have dropped out over the past year. Should you sell now? Buy now. Wait. Well, like I said, even if rates drop, the inventory opens up, it's just going to bring more buyers back into the market, creating more of the same. I honestly believe that the only factors that could truly shift our market would be a national economic catastrophe, which isn't currently on the horizon from what the data can tell, or, more likely, the construction of more affordable housing for first-time buyers and downsizers. Let's hope for the latter, as for the first time in over a decade, home builders are actually keeping pace with the 50-plus year national average for new construction homes. So if you're buying now, just do so with the mindset that rents tend to follow home values and they're always a bit higher. If you think you're going to be in the same area for 5 or more years, I'd just bite the bullet now and refinance someday when rates come back down. Even if you're getting less of a home than you thought your budget could get you, at least you have roots. And at this point, you'd be riding the price wave instead of trying to catch up to it. If you're selling, the market is in your favor for the sale, but buying could be tricky due to lack of options. Try everything you can to buy your next property first and then sell so that you can avoid a double move. New construction is a great option for this, as well as bridge loans if you know a lender who offers it. Thank you for joining me today on this insightful market update. If you have any questions or need assistance with your real estate needs in Plymouth, Northville, Novi, Metro Detroit, Metro Ann Arbor, don't hesitate to reach out. And remember to like, subscribe, and hit that notification bell to stay up to date with all things real estate. Until next time, this is Adam Summers signing off. Bye, guys.